Hey, good morning, everybody, and welcome to our webinar on effective strategies to stay profitable during the market shift in real estate. We've got some great topics to discuss and some very good guests. Kevin Markarian with Marker Real Estate, Billy Babcock with Cross Country Mortgage, and John Labick with Premier RE Partners at Remax Gateway. So all different expertise, but all relevant in today's world. So what are we seeing out there in real estate? So after a couple of years of awesome sales numbers and the revenue generated and people were buying and selling homes in record numbers, what we're seeing today is a massive drop. So in North America, typically in a year, we're doing about 6 million transactions. The National Association of Realtors this year is predicting 4.8 million. So that is a huge percentage drop. So really what we want to talk today is how we can still be effective as an industry to make sure that we can actually continue with success. So, let's start with a quick question. So I'm going to ask everybody, what do you want to take out of this webinar today? And if you want to just put your response in the chat, we'll happily answer that. And hopefully we can talk about some of the key issues that are interesting to the people that are attending the webinar. So let's start, and I'll throw this out to John first. So give me your assessment, John, of what's going on, from a real estate broker or agent perspective, and, quickly give us a couple of points of where you see success.
Sure, absolutely, and thank you. I'm so grateful to be here. So we are just coming out of what I would say was a unicorn of series of market conditions. All the stars, the moons had aligned with low interest rates that were historic lows and that prompted low cost of capital, everything that happened. Those times are done and we're shifting back. It was exponential growth. We're pulling back right now. I foresee us returning to a more linear growth model, and that's more of a stabilized market. Our inventory, I'm in the greater Los Angeles area, and I've seen the last couple months, our inventory increase by over 300%.
Wow.
Yeah, so more people are coming on the market, there's more days on the market, but we're still opening escrows. We opened multiple escrows this week. It is still happening. People are still buying and selling, but we have to have a mindset shift and really come to, as agents and as a broker, to bring value to our clients. Whereas before things were flying off the shelves so quickly, the process wasn't the same. And in my opinion, there was less time of educating the clients and truly helping them make a good or the best financial decisions.
Yeah, so we have seen interest rates go up, obviously, but they're still nowhere near the numbers that they were, say, in the early 90s, right? So when I bought my first house, I think my first mortgage was 11%. So is there a certain kind of education that we can deliver as an industry to the actual homeowners or buyers and sellers to literally educate them on yeah, the interest rates are going up, but they haven't reached the point yet where we need to really worry about
it? Absolutely. And cost of capital fluctuates. And I know there's multiple sayings about that. You can always refinance your home. Was it Billy that you had mentioned? You marry the home and you date the rate. I absolutely love that, Billy. And that's so true. As people's families grow and you have junior now, you need the extra bedroom. That's not going to change. You want a good school district to now raise your children, so you're moving. Life is in full session, as they say. So people will always need to buy and sell homes and relocate, whatever the case that life brings them. But with that being said, there are so many financial vehicles in how we can help our clients do that. And that's why partnering with an excellent lender is so important, because we'll negotiate the real estate terms, but the financial terms, your home is typically your single biggest asset. So you really need true professionals, knowledgeable and trusted advisors there for the client, helping them both on the real estate side and on the lending side to really make that solid team to get the best terms. And that would come in terms of what kind of loan, what is the time horizon for the client? Are you getting a new job in 2 years? Well, that might look different than, no, I'm buying my forever home.
Yeah, I had a couple of interesting conversations with people because there has been so much wealth created through real estate in the last 20 years. You know, you think about a home that was worth $500,000 a couple of years, 20 years ago is now worth, 1.8, 1.9 million. So I think there's definitely something we can do as an industry to educate and almost draw that money out of people to make other investments. And whether that's a rental property or, a lake property or a vacation home, I think there's opportunity. I like what you said yesterday, and I'm curious to hear your answer before we move over to Billy and Kevin. Is why do you think what happened in 2008 won't happen again? Like, that was a devastating time. I remember coming out of that. I was working for realtor.com at the time, and it's pretty difficult.
You know what? I'm so glad you asked that question. Thank you. I have a lot of my clients asking me that very same question. I'm sure a lot of the people listening now are getting that too. And really what the main difference is the lending terms or the criteria in place. In the past, you could actually just do a true stated income saying, I make $5 million or whatever the dollar amount is, get a home. Not only could you do 100% financing, you could actually do 125% of the current value of that home. And you could do that 5 times per social security number. So a married couple could technically have 10 properties with zero skin in the game, leverage 125%, and at such a teaser rate, negatively amortizing loans to where you get in at maybe, we'll call it $1,000 payment, and 3 to 5 years later, you're jumping to a $6,000 or $7,000 payment times 10. So right. That caused people be able to not afford their payments. And then what caused the market crash is people were so far underwater from an equitable position that it was easier to let the home go than say, hey, I'm 300,000 upside down. I'm going to walk away, and they could rent the same style home for similar to what their payment is. Those conditions don't exist today. Congress actually enacted federal law to create more checks and balances, to create a safer lending environment. I'm sure that we'll discuss that further today. But on top of that, because people have equity in their home, as you mentioned, people that bought a home for $500,000 might be, 1.8. Our median price point here in the Santa Clarita, Greater Los Angeles area is about $750,000 in this particular valley. But when I'm going on listing appointments and I'm seeing people purchase, they're sitting on hundreds of thousands of dollars. And we had such a big run up, like any rubber band, things pull back a little bit. And that's what's happening now. But all of the foreclosures that happened in 2008 were because people were so far upside down. Here, right. People are not going to allow that to happen. They're not going to give up keys to their home when they're still sitting on $200,000-300,000 of equity. They're going to say, okay, maybe I have to let it go at a little bit less sales price than 4 or 5 months ago, but they're still going to walk away with equity. So for all of those reasons, the true root cause of what happened in 2008, it just does not exist. And I know there's a lot of fear out there. See what's happening in the S&P 500, in the market, at the global scale economically.
Yep.
But the true root cause, those conditions don't exist.
Yeah, a lot of on paper wealth has disappeared in the last couple of months, right? We all experienced that. So Billy, as a mortgage professional, you've seen some really great times, and now we're getting a little more difficult. Let me hear your thoughts on what you see today compared to what you saw, 6 months ago, and what you think is going to happen over the next couple of years.
Well, just thanks so much, Stuart. Just real quick, John, we had sayings back in 2006 and 2005. Unfortunately, like If the person's 98 degrees in perpendicular, we, get them a loan. And that's how easy it was back then. And, to your point, yeah, the lending guidelines have completely changed. They have to have, we verify their job. We verify it at the very end before we record, before we fund the loan. We're asking for updated documentation all the time. Like, it is a stringent process. Like, anybody that has bought a house in the last, 10 years knows the amount of paperwork and the amount of, scrutiny that goes through, their financials to get them approved for a loan. And Stuart, to your question, what we've seen, in the last 6 months or even the last 9 months, let me take you back and do a comparison from January when, the rates, let's say they're around 3%-ish, to now where the rates are around 6.5%. If you were to buy a house in January, say, a $1 million house, and if you wanted to buy and have that same payment now, you would have to buy a house that was priced at $715,000. So that effectively has decreased a buyer's buying power by $285,000. And buyers know that. And what's happening right now is sellers want yesterday's prices, and buyers want tomorrow's prices. And so what a great lender and a great realtor will do is they'll put, they're going to create the meeting of the minds where that seller is agreeable to those terms and that buyer is agreeable to those terms. And, it all comes with education. It's just educating people as to what their current situation is, figuring out what their current situation is, figuring out what, their options are for housing. I mean, housing is one of Maslow's hierarchy of needs: food, water, and shelter. And, it's such an important aspect to our lives, and having control over where we live is, that is worth a lot of money. I would say that is worth a lot of money. And
so right now obviously it's an interesting time. Would you recommend people lock in their mortgage today? Or would you say, you know what, there's a brighter future ahead of us? Or, tell me something like along those lines.
You know what, I would say lock your mortgage today. And the reason is because there's too much uncertainty. And it's very volatile. The market is extremely volatile. We're seeing swings on a daily basis that it would take weeks, if not months, to get that amount of movement in the market. And we're seeing it on a day-to-day basis. It's just like, these swings are astronomical.
So we talked a little yesterday about a 2% or a 1% buy down. Do you have an example of that?
Buy down. Yeah, absolutely. So, let's say somebody was in John's market and they were looking at that median house price of a $750,000 purchase. Well, what we're seeing is, a lot of sellers may opt for lowering their purchase price in order to grab more attention, right? To get that buyer out there. Well, they don't necessarily have to do that. There could be a better way, and that could be offering to pay for a lower payment, essentially, for that buyer. And that's done with what's called a 2-1 buy down. So again, we're using this example, like if today's rate was 6.5% and they did this 2-1 buy down, the first year, the payment would be based off of a 4.5% interest rate.
Wow.
The second year would be based off of a 5.5% interest rate. And the third year would be back up to that 6.5 interest rate. And why would somebody want to do that? In a 2-year time frame, you're going to be back up to that 6.5% rate. Well, what we're thinking here in the industry that's going to happen is these high rates are somewhat, this isn't a long-term thing we're going to be in. There is a light at the end of the tunnel. And the question is, how long is that? How long until we get to that end of the tunnel? It's forecasted anywhere from 8 to 18 or 2 years out. So getting that seller credit applied to your payment to decrease your payment is going to be a huge benefit to the buyer. It's, by the way, it's $846 less per month for that first year.
It's a lot of money if someone, you know, is
Absolutely,
struggling, right? For sure.
Absolutely. $433 the second year. So, I mean, I think that's a win-win for both the seller and for the buyer. You know, they don't have to reduce, the seller not having to reduce potentially as much in price, and yet helping the buyer out with that lower monthly payment.
Yeah, no, it's fantastic. I'd never heard of it before, so it's super interesting to me. It's, you know, there's some of the companies that are out there in technology right now are doing really well with the rent to own side of things. You know, a little bit different concept. Kevin, I'll ask you next. So, you know, you've been in the industry a long time, right? And you've gone through the ups and downs of the industry. So what do you see as the biggest challenge today for the real estate industry?
I think the biggest challenge right now today is mindset. It's really easy to get down on ourselves and be worried about what's happening, looking at the news, watching, you know, all this stuff that the Federal Reserve is doing. And so that translates over to our clients. And so if you look outside right now, there's a good chance you're going to see a house, right? Look outside. So
Yeah,
that means
absolutely.
Right? And you mentioned earlier there were $4.8 million transactions predicted to be closed by the end of this year. In 2008, I believe there was 4 million. At the peak, there was like 6 million. Okay.
Yep.
So the difference, yeah, it's a big significant change, but there's still far more transactions that I can ever get my hands on as an agent. Okay. So
Yep.
the point with that is that we're always in real estate and in sales, we're looking for a needle in a haystack. So like maybe a year ago, there were less hay that we have to get through to get to the needle, but now it's more hay that we have to get to the needle. So the point is, how are you going to get there faster? And that's why it's important to partner with people like Billy to educate ourselves so that we can educate our clients and also find solutions and products that are going to help us get there faster too. So if you look at the most successful people in real estate, what do they usually do when the market shifts? Do they completely shut everything down, stop their marketing, fire everybody? I mean, yes, adjustments need to be made, but the last thing that we want to do is get caught up in the fear and anxiety of what's taking place in the marketplace and really think about the result. The result is most people aren't going to continue to invest in their business. Most people aren't going to buy leads. Most people aren't going to invest in a platform like Chime or, you know, other platforms that are going to help us grow. So that's more opportunity, right? So if I have the fundamentals, if I know what it takes to be successful, and we've been here before, like this is not something new, right? So just find out what the most successful people have done in this kind of an environment and just copy it. We don't need to reinvent the wheel. The most successful people invest when others are scared, right? When people zig, you zag. There's that phrase, right? So if everyone else is scared in the market, I'm gonna be confident because I know I have the fundamentals to know what it takes to be successful. So we're going deep with our marketing. We're going deep with our strategy to continue to grow our business and really provide solutions to our clients. Like we have to be solution providers. And John mentioned it earlier, like what's our value proposition? You know, like what are we bringing to our clients that they can't already get their hands on online or elsewhere, right? So what can we do to differentiate ourselves in the marketplace? And
so here's a question. Here's a question for both you and John. So are the questions you're asking a real estate investor different today than they were 9 months ago? And what are those questions that are going to bring the value or get that real estate investor to understand not only the value you bring, but the stability of the industry in whole?
Absolutely. Would you like me to begin?
Yeah.
Okay.
Let's hear it.
So there is a little bit of a difference. So I work with a lot of investors. We actually just closed on several multi-units in the last couple of weeks. So it's been great. Investors are still out there purchasing. And it's my opinion that you absolutely should. And the adage says it's don't wait to buy real estate and wait. So with that, the question then becomes, as I mentioned earlier, what is your time horizon and what is your goals? So there's different kinds of real estate investing. In the last couple of years, I've represented a lot of contractors, the fixers, flippers, doing the distressed properties, the trust sales, the probates from, sadly to say grandma passed away, deferred maintenance for 30, 40 years. And people could come in, renovate those and 30, 60, 90 days and make a significant profit because of
Right.
the way the market was escalating to the upside. Now that has cooled down a little bit. There's still opportunity, but again, we just closed on a fourplex here in North Hollywood. And with that, we were able to actually get my clients, I represented the buyers on this, and we got them a significant acquisition price, which is going to lower their tax basis. Because on this deal, the time horizon it's a long-term hold for their portfolio. So by a lower acquisition price, which we can negotiate in this market, they got a lower tax basis, which is fixed. And then whatever the financing is, they could refinance those terms later, but that tax rate is fixed, offering a lower monthly liability for a greater overall profitability. So those are the kinds of conversations and questions I'm asking is what is the goal and what are we doing? And now we need to be a little bit more discerning with what are we acquiring. And then for my sellers, I'm just discussing with them, what are they doing? Are we looking at a 1031 scenario? Even if you take a little bit lower sales price, but then following 1031 rules, we might roll those gains because if they've held it in the family trust for 30, 40 years, and then acquire multiple other properties also at a lower price, therefore drastically increasing their monthly cash flow. So just because maybe we got them $50,000 less arbitrarily on the sales price of one multi-unit, but can now get in and enter in two multi-units following 1031 rules. And now your monthly cash flow might be $3,000, $4,000 more per month than in the previous scenario. So, but this is where you educate them and work with, again, a great lender to really understand the financials of what's going on and help them grow their portfolio.
Yeah, I'd say also it's simply numbers, right? So I mean, what you would have paid for something a year ago, you're not going to pay that today. So just about buying right. And frankly, investors have a significant advantage today than they did in the past because there are less people out there buying, and sellers are not in the position that they were a year ago, right? It was 25 offers on every property. So it's really just looking for those opportunities and positioning and helping your investors, depending on the type of investor, like what's their goal, like John was saying. Are they looking for a long-term kind of a situation where in that case, then, I think it's a bit of a safer situation, right? Because like Billy was saying earlier, experts and people in the industry are anticipating rates not to continue to go to 25%, let's say, in 3 years, right? There are probably going to be some adjustments taking place down the road to soften things a bit, where now they're a lot, it's pretty challenging. But like for flippers, looking for shorter term return. So like that's kind of what we're seeing, right? We don't want, because there is uncertainty, so our investors are not necessarily looking for projects that are going to take a year to complete. For flippers are looking for projects that are going to take, a quarter of that time to complete, right?
6 weeks, 8 weeks.
As quickly as possible, right? So, but it's really just about buying right, and us as agents to help our investors find opportunity, again, through partnering with, using our resources. What platforms exist today that I can potentially get some seller leads from, right? What's resources can I utilize that will allow me to nurture past sellers and tap into my database so that I can continue to stay in front of people that may be interested in selling or buying or whatever the case may be. For me, it's really just about using our resources, technology, different strategic partnerships, different companies, and so on to grow my business and help my clients achieve their goals as well.
Yeah, and I agree with you there. I want to ask Billy a question quickly, and I think he's the one that can probably answer it best on this call. How does the housing market affect the economy, right? What we see on CNN or any of the news networks that you're watching, they talk about, the economy and how the economy is in a downward trend right now. And it is often directly related to the housing market. They almost come with one another. So do you have any thoughts on that? I'm pretty sure people want to know a little bit more about that.
Well, I can tell you that the housing, that how it affected the economy in the last 2 years was astronomical, and the reason being is because you had this growth in value, you had this decrease in interest rates, and you had this perfect storm, or this perfect ability for people to tap into that equity. There's only two ways to get money out of your house. There's two ways, and it's to sell your property or to refinance. And so the last 2 years allowed people to grab that cheap money, put it into their bank accounts, and guess what happened when it went into their accounts? It started pouring out into the economy. And that's why we've been seeing a lot of this inflation too, right? I mean, there was a lot of spending because of that. You had cheap money that was being borrowed. And so, what's going to happen now is that your things are tightening up. You don't have, I mean, obviously we know rates are going up, but that also means that people aren't refinancing. They're not getting money out of their house. And so that being the case, it's trapped in their house. They are not spending. They are not cycling that money into that economy anymore. And now you just, you have a contraction. You have multiple things affecting our economy that are creating a contracting market. By the way, are we in a recession? I guess the jury's still out. It's not official yet, although we do have two quarters of negative GDP. But until we, they want to review the depth, duration, and diffusion to determine whether or not it is official. So that's
If I asked my financial advisor, I'm pretty sure he would say yes, we're definitely in a recession because everything is just dropping so dramatically. It's a bit crazy. So let's talk, Kevin, you mentioned technology, right? You talked a little bit about it in a couple of your answers. So what systems are you using today to overcome the challenges we're talking about? There's so many different opportunities in the real estate technology market. I'm a huge techie. Obviously, I work for a technology company. Give me your thoughts around that. Your typical CRM stuff, but what systems are going to come out ahead in the end?
Right now, I think it's all about building relationships and staying in front of people, providing value. Maybe in a scenario where you have a seller that maybe isn't ready to sell, but what else can I do for them that might just provide value and put myself in a position for when that time comes, I'll be there. They know that I'm the professional to reach out to. Obviously, I'm a big fan of Roopler. We've been using Roopler, right? Big surprise on that, right? But we've been using it, in our brokerage and, utilizing it for seller leads, and that's been helping a lot. But, companies like yours too, Stuart, you guys have the ability to stay in front of people using automation. That's a big thing too, is there's as much leverage as I can possibly utilize right now because yes, I think it's 40 conversations that the statistic, it takes typically 40 conversations to get to one sale, 40 conversations about real estate to get to one sale. Maybe that number is higher now, right?
So that's an interesting topic. It's actually a really good topic because I love this part of the industry. We think about the large portals, right? So we think about the Zillows, the Realtor.coms, even Trulia to some extent, although they're kind of fading into the darkness with very poor conversion rates, right? When you look at the historical data around conversion rates, and when you say 1 in every 40 conversations, you have to have a system in place that not only is top of funnel, but you now got to think about the long-term effects of your database and the number of people in that database and how many times you're touching them. So John, I'm going to ask you the same question. Are there certain systems or multiple systems that you're using, to go along the theme of the webinar, how do we stay profitable?
Absolutely. And I have for my team, I'm a huge proponent. I'm using Chime and Roopler, and they integrate very well together. We just opened escrow for a family that we were able to get connected. It was the lead came in from Roopler. This just happened last week. And then it came through our Chime CRM with the technology between the computer application, the phone application. It's at your fingertips. So with agents on the go, as I mentioned earlier, life's in full session. picking up their kids from school, were able to connect with the lead immediately because of the technology we have in place. And it was a real family in need. We got them to showing right away, and we're in escrow now. So the technology that you implement, and there's so much technology out there. I've tried other CRMs. I've had other lead sources. I've purchased leads from just, I think, everyone you mentioned, but Trulia. And I'm choosing to not work with any of those companies anymore because of a number of reasons. But I have to say that I am very pleased with both Chime and Roopler. Not only that, the customer service on both sides, because with any new technology, there's a learning curve. And to have an excellent support staff, which both of these products do, which is fantastic. If I'm not available, my office manager or one of my buyer's agents or other people on the team can call in and get immediate support for whatever issue or bit of confusion. And that helps them provide value to the families and maintain those relationships that Kevin was talking about. So I'm very grateful to be using both of these products, and we have seen immense success with my team.
One
Yeah,
thing
we've got a few customers on Roopler, and I'm hearing amazing things about the seller lead program for sure. I'm going to go, before we go back to that, I'm going to go in a little bit different directions because there's something that I think we don't talk enough about. So there's this concept of the iBuyer, the power buyer, and how they're running their business and how they make money is basically taking a portion of the commission away from the agent. What do you think of those programs compared to, say, a Roopler? I believe the traditional methodology that Roopler brings makes a ton of sense, right? You're really getting the right people. So, you know, the concept of an iBuyer is that they'll connect you with a buyer or seller, right? And for that, they take a portion. What are your thoughts there?
Well, the difference is they connect you with a buyer or seller and take a portion. Roopler connects you with a buyer and seller, and you keep everything, right? So that's
Yeah,
pretty significant difference there. And yeah, I mean, it's simple. It's we're getting calls from their support team, and from the support team, they have conversations with sellers that are interested in talking with an agent, and an introduction is made. They're expecting to talk to somebody. An appointment is set, and then from there, it's up to the agent. I mean, there's in-person appointments and there's phone appointments, and it's basically an opportunity to list a house or to find an investor or a cash buyer or whatever the situation might be. But it's there's no, like you said, it's a lot of those companies are in it for one thing, and that's for their own pocketbook, right? So it's like this really creates an opportunity for agents to go out there and get more listings and keep all the money that they work for. We work so hard for our commission dollars. And
yeah. The one thing I can say is that I've heard, we deal with a lot of lead vendors. Obviously, we have 50,000 customers in our database, and the promises that most of them make just do not come true. But what I'm hearing about Roopler is the opposite. I think the leads that are coming in are very, very real. And I think, John, you can probably attest to that, which is great. What's in the future of Roopler? Where do they go next?
I think it's just continuing to partner with good agents that want to grow their business, that want to invest in their own businesses. Right now, we've been very selective on who we're choosing to work with. But so far, it's been it's been great. Like the like you said, the reception has been great. The lead quality has been great. Partnering with companies like Chime has been great because there's a really solid integration there. So we're partnered up with Chime and the CRM platforms to create a synergistic experience for everybody. And yeah, I mean, it's just providing as much value to the industry as possible. I know what it's like. I've been in the industry for a long time. I've worked with all the different companies, like John was saying, and this has been something that has been kind of like a project that I've been involved with to give back to the industry and create something that is unique, that allows agents to be successful, work with more clients in the challenging environment that we're in, and not really break the bank in the process. So, I think it's just a continuation of what we've been doing, but on a larger scale with the right people.
So here's a question, and anyone can answer this one. So if you were to say, we all look at the industry, and there's about 1.6 million real estate agents in the US today. Some are part-time, some are new, but the established group, it's probably 200,000 to 300,000 that are really active and doing lots of transactions. What would you say are 3 key components of your tech stack that you've got to have? And if it's 4, that's fine as well. There's CRM, there's CMAs, there's a bunch of different things. Give me your thoughts on that.
3, I'd say, it's kind of a wide question. So I'm gonna take it and answer it the way that I've kind of
The way you
Please.
interpret it.
how I've interpreted it. So my thing is, I have to have a solid lead source. I have to have an assembly line of leads coming in. Think of just think of like a factory, and there's like a tomato factory. My mom worked at a tomato factory growing up. So it's like, how many tomatoes can I get to? How many can I talk? How many can I touch?
Yep.
So we need to have an assembly line where leads are coming in when I'm not necessarily going and working for them, to go and find them, right? Like it's a system, number 1. Number 2 is having an automated way to nurture clients so that I'm not the one having to call. If I'm generating 100 leads a day, 20 leads, 30 leads, 5 leads, I don't have to.
So powerful AI,
Powerful
built
AI.
into the CRM system, right?
Absolutely. And then being available, being ready. When somebody does reach out, if I'm available, I'll be able to pick up the phone and call. And if not, then I have a team that's available to pick up the phone and call. If I look at our inside sales team, so we get worried about hiring. People are always concerned, oh, well, how am I going to hire someone? It's a big commitment, so on. It's just like, the way I've looked at it it's just an investment that I'm putting into my business, like I would put in for any other piece of technology or whatever the case may be. So to me, it's those 3 things.
Makes sense. Makes huge sense.
Yeah.
John, same?
Yeah, I mean, you hit the nail on the head. It's like any production factory, being in production, you need those raw materials, and then you need the resources to process them. So an excellent lead funnel with quality raw materials, leads, but then you need quality factory equipment, your CRM. So if you can't manage them, you can't set tasks, you can't set reminders, trying to keep that all in your mind or little post-it notes all over your wall, things are going to fall through the cracks. Clients are going to be missed. They're going to work with somebody else. So to have something to manage, not just the tasking, the database, and Chime does all these things. And I've had multiple CRMs over the years. And I'm very happy with Chime because it's like you listened to the agent and a busy agent on what do you need. And it provides that we can do these things. We have these resources. Oh my God, I got to call Mrs. Smith at 4 p.m. And I set that task 3 months ago. I'm not going to remember that in my day-to-day. But when I get that reminder, okay, that's fantastic. So when an old mentor of mine used to talk about dropping socks, when you're carrying a big ball of laundry, and then all of a sudden you're trying to carry too much, and you can see from the laundry room, your bedroom, you drop
The trail.
Yeah. And with strong systems in place, we want to make sure you're not dropping socks. And I believe we have that with these guys.
That's a good analogy. It's a good analogy for sure. Billy, when we
Stuart,
talked yesterday, you talked a lot about.
There's nothing else that I can say that's going to add any more light to the situation. These guys nailed it. And I just, Kevin, basically, just to break it all down, you got to talk to a lot of tomatoes, and don't drop those socks.
Yeah, there you go. I want to add one thing.
The one thing you talked about yesterday was video, right? So I believe video is kind of where we can get to the next level. There's some great opportunity to present yourself in a different light, right? As a person, as opposed to a business card, let's call it.
Absolutely. Video's huge. Yeah. Sorry, Billy, you want to answer that or?
You first, Kevin.
Yeah, no, I would say creates more of a personal connection. So like if you think about the journey of a client going from online, and we send a text message, then it's like we want to get it in front of them, right? So the next thing is going to be a phone call. Then the next thing is going to be face to face. Well, video bypasses, in my opinion, text and phone, because now I've got that personal connection, the emotional attachment. I want to get to that face to face as soon as possible. Although it's not necessarily like a back and forth situation. It's one way because they're only seeing my video, my face, but at least they're getting a connection with me personally in an emotional way. So definitely I'd say like sending out text, video, like if you talk to somebody, it's like, hey, it was great talking with you. You know, like I look forward to talking with you again. You mentioned you're going to be looking in this time frame, whatever. Just a quick intro, and it goes from being like a robot, you know, on a lead gen platform, and they're texting you and there's no connection, to an actual human being that they can now have an affiliation with. But here's one thing I want to mention, because we talked about databases and generating hundreds of leads and this. If you're watching this, maybe you're thinking, well, I don't have 100 leads that I'm generating a day. Okay. But you actually do. Everybody has a lead source. Everybody has a database, and that's your sphere of influence and your people that know, like, and trust you. Now, where are those people? The people that we know, like, and trust, how do I get them in one place? Well, everybody that I know, like, and trust, and that knows me, is right here on my phone, right? So it's about getting your contacts out of your phone and putting them in Chime, so I can start nurturing them with conversation. But how do I do that? How can I get all my people from my phone into a CRM platform? There's an app. It's $5. I don't make anything from it, but I'll take $1 from you guys. You want to send it over? It's called MC Backup. MC Backup allows you to take all the contacts out of your phone and put them in a CSV file that you can now import into a CRM. And now there's different campaigns that you use for your sphere of influence that you're going to use for a brand new lead that comes in. So maybe
Absolutely.
I'll take my sphere of influence and say, hey, it's Kevin, John, nice talk. Like, it was great. I haven't talked to you in a while. Market's crazy. Just wanted to catch up. Give me a call sometime. Boom. You can automate that too. So I highly encourage everyone to do that. Like, do it right now. Go on your phone, literally pull up MC Backup in your app store and buy that thing for $5. It's going to be the best investment you make today. And then now you're starting to have those conversations with people and getting closer to the transaction, because we talked about going through a hay to get to a needle in a haystack. So it gets us one step closer. So I don't know what your question was, but
No, that was good. That was
All
perfect.
about
It
video.
was great. I've got one more question for you guys, and you can each answer separately, and the answers might be the same, but they might be different. So when you think about real estate, what do you think the future looks like for the housing industry in the next 2 to 3 years?
I'd be happy to begin with that one. So, like any rubber band, when things stretch very far in one direction, there's a little bit of a pullback. But with that being said, so I foresee prices pulling back a little bit, but again, as we discussed, not a crash. The other thing to bear in mind is, again, follow the numbers, follow the data. We are, as a nation, approximately 6 million homes short of where we need to be to satisfy the entire demand as a country. They built less than just over 900,000 homes last year overall. So we can barely keep up with the current demand, let alone satisfy the deficit of inventory. We are still at a lesser inventory than where we need to be in a normal market, at least in my area, but certainly across the country, the numbers vary from city to city. But with that being said, we were spoiled in the last couple of years, but now as a nation, we are still below inventory. So some of those things are also going to stabilize and say create a higher bottom than some people are fearful of that they're predicting, because the demand is still there. Yes, in the last 2 to 3 months,
100%.
we've had a spike in inventory compared to nothing. Now it's like, instead of having 200 homes on the market in a town that used to have 2,000, of course that creates that bidding war, supply and demand. But now maybe we're at, instead of 200, we're at 600. Well, 600 is still less than 2,000. So when we think about it comparatively, we are still lower, experiencing a lower inventory than what a normal stabilized market is.
I totally agree. The demand is definitely still there. But here's the thing. Like, okay, to prove that, 3 months ago, there was 20 houses, 20 offers on every house. Okay. But now that's not the case. Where do those people go? Like, do they not need a home anymore? Like, what happened? So the
Rent.
demand is there. It's just an affordability thing. It's price. It's a pricing thing. So I think the answer is prices might probably come down a bit. But frankly, I don't even care. You know, it's like my objective is to focus on who are my clients? What are their needs? What can I provide to them? How can I provide value to them? How can I educate them? How can I give them value? How can I connect them with people like Billy to give them the two for one buy down option? Like, it's like, yeah, the market is going to do what it does, but we've been here before. What's going to happen in the future? Go look at 2000 whatever year where there was a down time and it came right back, right? So short term is going to be a little bit slow and there's going to be some bumps in the road, but long term, it's going to be back to what it was, right? Like rates are going to come back down. People are going to be back in action again. Transactions are going to come back up. But again, it comes back to there's far more transactions that I'll ever be able to get my hands on. 4.8.
Yeah, I'm a strong proponent of real estate investing. I believe that if you look over time, the one thing, the stock market fluctuates massive amounts. The one thing that doesn't, to me, is real estate, right? So I try and put as much into real estate as I possibly can. And you guys, you're all probably investors as well, right? It's not just about the home I live in; it's about the other properties that I look at or I invest in. And there's so many different options for people to change the way they do their business as a real estate agent. I'm actually looking forward to see what happens over the next 2 years, because I think we're only going to get better at what we do as a group.
Absolutely. You have to. And it's really focusing on the fundamentals. But yeah, sorry, go ahead.
It's all about the monthly payment. That's all somebody really cares about. Like, hey, we can talk about this price or we can talk about this rate, but at the end of the day, somebody's going to have to make that payment on the first of the month. And so when, that's their bottom line. And what happened in March of 2020 is rates went down. And so that means affordability went up, right? That means that this cost of the house was much more affordable because the monthly payment was so much less. And so that's why for 2 years we had this increase in values, because people were like, yeah, that's cool. I'll pay more. I'm fine with that because my rate's going to be 3%. My payment's still low. And now what happened?
Such a good point.
Now we had interest rates go up, and people are looking at that payment going, whoa, wait a second. That same payment is going to cost, or that same house is going to cost me $1,700 more as compared to January. Like, wow, that's not going to work for me. So in order to, what lever do they have to move? Like, no, the rate is stuck. All right, well, I'm going to wait for that price to come down. That price comes down, that payment comes down. So that's the indicator, I think that is really going to drive where we're going to end up in this future, right? So, but with all that said and done, honestly, it just comes down to, getting leads like we were talking about, stacking those leads up, working them, don't drop those socks, and close those deals.
Absolutely.
So we're about 50 minutes in. I wanted to leave some time for Q&A. But I'll just, to finish, our conversation, I think as a real estate professional, I've been in it for a long time. Kevin, we've all been doing this a long time. As a real estate agent, I think there's things you have to invest in. Good leads, quality leads, work with the right company. You got to have a great CRM to nurture those leads, and you have to have a plan to follow up on those leads long term. Because it's not just about top of funnel anymore. It's about how you manage your leads over the life cycle of that person, whether they buy a house every 7 years or they transact with you once and they never transact with you again. There's reasons for that. And if you do a better job using the technology that's available, I think everybody gains.
Totally agree. I think it's really just kind of pretty much what you're saying. It's like the fundamentals, building relationships, connecting with people. And we have the ability to do that in a larger scale because we have technology like Chime. We have lead platforms like Roopler that you can purchase and generate leads and create more opportunity. And I'd also say, think about are you in this for the long run? Because nurturing clients and staying in front of people, it's like, what happens in a year? What happens in 2 years? What happens in 3? Like, these are sort of seeds that we're planting for future business. So it's just staying consistent. So I'd say like prospecting and working on generating more clients, whether it's buying leads or calling or working your sphere, number one. Number two is going on appointments. Those are my focus: prospecting, going on appointments. And those are basically those two things. Like, if I'm not out generating more clients, building more relationships, then I'm out on an appointment. If I'm not on an appointment, I'm generating clients, building relationships. It's those two things. If I focus just on those two things, it's a 100% guarantee. Like, we're gonna have opportunity. And then it's just improving our skills, getting better at having conversations, getting better at doing, consistent with our text blasts and things. So it's a constant process, but keep it
John,
simple.
closing thoughts?
That I agree with all these things, and with whatever temporary maybe reduction in transaction count in the short term because of the payment structure, those relationships, as every one of us, Kevin really hit the nail with that one, maintaining that and truly being of value. Remember that these are clients, these are families, these are people, and they're not just paychecks. Really be there for them. And if that's, you transact with them once or multiple times, don't forget to be a human being. This is a business, but truly be there to take care of people.
Billy?
Have great conversations, talk to people, understand what their situation is. And you're not going to change their minds, or you're not going to create thoughts, that change their actions by just talking at them. The most powerful way to do that is ask good questions. When you ask a great question, it gets people to think, it gets people to, think about what their response is going to be like, and it's going to think about their future. So,
can I ask the audience one question, Stuart, before we
Yeah,
go? I'd love to.
absolutely.
We spent about an hour together here today. So, from my own vulnerability, and maybe I can speak for everybody else, I don't know, but I'd love to know what's one thing that you took away from this call today. Like, please, if you could share with us, we'd love to know. Just put it in the chat. What's one thing you got from this call today that you learned, that you benefited from? We'd love to see that. I know I'd feel really good about it. I know everybody else would. If you could just put it in the chat. What's one thing you gained from this? We spent an hour talking. We'd love to see that. Just go into the chat and just put that one thing one takeaway would be awesome.
Yeah, and if anybody wants to learn more about Chime or Roopler or any of the other solutions that we talked about today, reach out. I'm personally happy to answer any questions and have a conversation with anybody who wants to know more. And I'm sure you're the same, Kevin.
Absolutely. Please.
right on.
Yeah.
All right. So thank you everyone
fun,
for
guys.
attending. Appreciate you spending the time with us today. And we will do more of these in the next couple of months for sure.